In today's episode, I'm breaking down my first month's data with the bots and my profit and loss. Let's get into it. Hello, hello, hello. Welcome to my space, whether it's morning, afternoon, night. Thank you for joining. Today, we're going to dive into some analytics of how well these bots are actually performing for me, how well I can expect them to perform in the future, and why we've chosen to continue to keep these few bots that I have going right now. I also want to show you some of my history. So my history has not been uh, that excellent, and we will show all the statistics and everything based off of that, and me essentially losing money in the past 2 months. But most people have. The market is down quite a bit, 35%, 33% here, and it continues to trend down slowly today here in February 2022. So I'm still very bullish on this strategy. I still think my bots are an excellent, wonderful idea. I've already um, put in quite a few dollars into four of these bots already, and these are the results that Bitsgap is showing us, right? So I just want to briefly show you some spreadsheets that I keep track of the data. I don't always assume that they're doing well according to the information Bitsgap is giving us. So I have started four bots and closed four bots, which are in the red here. And so you've got your starting investment, the end or current investment amount, and how much per hour that it was trading for. So this is 34 cents, 66 cents, 71 cents, and 6 cents per hour here. And then these are the bots that I currently have active. So they're trading at 83 cents an hour, 77 cents an hour, 50 cents an hour, 56 cents an hour. I want to note that this was the market change during each of these bots' lifespan. So currently, the two bots that I started that with, um, BTC's price dropped significantly, and I lost the most money there, right? And out of the four bots that I have running, three of them are in the red because the market has been down, and none of them have been running longer than 26, 27 days now. Koval is 27 days and 14 hours. So the longer these run, the better the numbers show. So this is a long-term strategy. Um, I anticipate that a year from now, if I just left these bots running, they would all be in the green and everything would look amazing. But in the short term, because of the market change and the fluctuations, these don't show all that amazing of a numbers. But um, I want you to look at this. So we have daily transactions here that I've calculated out based on the amount of transactions and their current life. So this maturity in hours, this is how many hours each bot has been running for, right? And so we've got my active bots at 94 transactions an hour, 102 transactions an hour, 80 transactions an hour, and over 196 transactions an hour for this one in my newest one that I started. So the reason why this one's performing so much better is I did a lot of research before I started this last one, um, and in 32 hours, it's only made 6 cents per transaction, but because there's so many transactions being taken place, that adds up, right? And so your monthly profit should be around this, right? And so at 27 days, this one's made $555, and we were projecting here that it would make about $604, which is about accurate. But that profit and this monthly profit is not taking into effect the market change, right? So Thankfully, the market in this case was trending up a little bit. So BTC is up according to whenever I started this bot back, almost a month ago. And so we can show a little bit of a profit here. So we've gained at least $260, $170 here, and everywhere else we're kind of losing, so it seems. But the bot is trading profitably. So even though the bots show that they're at a loss currently, going back to my last video about trading and having a good mindset about this. So whenever you're running these bots and you see that the market's down and we're at a loss, right? You have to think of this kind of like holding poker chips. So whenever I start this bot, I bought in with 3,000 poker chips. And even though currently those poker chips are devalued by 10% or so, I still own 3,000 poker chips. So as this bot performs, as this bot runs, it is stacking me in these profits over here, extra percentages of new poker chips. So a month from now, if this is profiting me, what would we say, 604 right here? So that's well over 10%. Let's go ahead and calculate that. So grab our calculator, right? So our calculator, and we're gonna say 604 times 100 divided by 3,000. That's about what we started with, right? Well, let's do it exactly. Let's go 604 times 100 divided by, what do we start with here? 3,474. So that's 17.3%, all right? So 17.3% every month. So theoretically, if I let each of these bots run for a month so they can become more mature, right? As they grow up and have a trading history of 30 days or more behind them, then at least in this one's case, it will have earned or traded 17% of its initial startup. So when the market drops, it doesn't hurt near as bad because now I have 17% more chips, more poker chips than what I started with. So I would have 604 more poker chips on top of my initial 3,000. And so even though those would be devalued based on where I started at, all of those extra chips still add value to that account. So it's not as bad. The beauty of this is all of these coins are tied to Bitcoin, and Bitcoin, we believe, will go up over time eventually. So it's kind of a waiting game. So you want to wait as long as you can. My strategy is to take profits every month whenever this becomes mature. So after this is showing that I have earned hopefully $400 or more off of each of these bots, was kind of my theory. So even if this trades $604 in profit, as long as the bot is not underwater because the market's dropped so much, like 33% or so up here, like we've already seen, then after 30 days or so, I can take the profits and I will reinvest 70% back into the bots and 33% into stable coins. So what does that look like? What is that strategy exactly? So I'm taking 70% of all of these profits and either holding it in my wallet on the exchange, okay, until I get another $3,000 to invest into another bot, or and I'm taking 33% and I'm staking it or putting it in something else um, that holds a stable coin that will always hold its value in increase. So I will always have this 33% set aside. The reason we do that is because, yes, this is a very risky strategy. I'm not a financial advisor. I don't um, say that I'm an expert in investing or anything at all. But even if these all dropped 20, 30%, I believe that I would continue to let them run, continue to let them work and do their thing, even in a bear market. But that would kind of suck because I would be underwater for a very long time. Um, but they would be essentially, if you want to look at it this way, if the market dropped so much that I'm I'm sitting here like trying to pile on dirt into a hole, and if the market dropped, that would be like somebody dropping a bomb and blowing my hole up and making it even deeper, right? Then even if I fall down a few feet, a few yards more into the ground, my bot's already there. They're already set up. They're already trying to refill that hole with more dirt, right? Um, so they're going to do their thing no matter what. It's just a matter of time. And I believe in Bitcoin's price. I believe it will recover. I believe our current price right now is nothing. It's actually quite low, so it will rise back up to 60,000. It's just a matter of time. So the question is whether or not I can afford to continue to run these bots and to hold this investment for an extended period of time. At least for that answer for myself is yes, I can. So I believe in this 100%, and if they are able to accumulate what this actually says, this 405, 360, 556, 604 on average regularly a month. Or if you want to break it down even further, I have the weekly averages here: 141, 129, 84 a month and a week, and 94.50 in a week right here, according to their profits and transactions. Then I believe in these numbers. Like these are cash flow numbers. So over the long term, if I have 20 to 50 bots and they are all making me $604 extra dollars in crypto a month, 556 extra a month, 360 extra a month, 405 extra a month, that starts to add up. And at that rate, with that many bots, the market change isn't really going to matter that much anymore. That's like setting up Bitcoin mining ASIC miners, right? So I have one behind me on my shelf. I've invested in ASIC miners. I still believe in them. I still think they're a great thing for the economy, for cryptocurrency. It's just not for me. I don't want to, number one, invest thousands of dollars into a machine that will earn so much profit today, but over time it gets worse. And the trend is always worse. So it will always make less money because Bitcoin's price um, is going up, and the hash rate is always going up. So it becomes harder to do the work that the miner is performing over time. So it's not a sustainable cash flow resource in my mind, right? Whereas this strategy, this bot is literally using the cryptocurrency that's available, whatever the price is, whatever the market is, and it is performing in minuscule percentages, but in a profitable way, right? So we already know that this bot is trading constantly all day long. It does buy at a loss and sell whenever we have gains in the market, and it does that all day long whenever the market fluctuates. So it is a really good thing whenever this bot is set up in a market that fluctuates a lot, right? And that's what I wanted to get into here at the end of this video. Is I wanted to break off, and I have these things that I look at whenever I am choosing coin pairs, and this is their rank, 24-hour volume, and the market percentage. So I just want to break these down a little bit uh, based on the ones that I've invested in. So we're gonna go to a website that I like, CoinGecko, and we're gonna look up Koval, right? So Koval is performing well for us. We've made $555 in trades profitably this month, and this is what I want to look at. So according to the website, Koval is ranked 404th. So it is ranked, it is listed on Coinbase. So I just want to briefly mention that Coinbase has a very long process whenever they add coins to their market, and you can trade them on their platform. And that process is something that um, I kind of believe in. So you want to think of it like this: Coinbase does not want to add a bunch of coins to their market, and they don't want to spend all that work adding all those coins just for those coins to just disappear tomorrow, right? So if I trust Coinbase, if that's where my money is, then I immediately kind of assume that most of their offerings on their platform are somewhat safe. Now it's there's never a guarantee. Every exchange has had its own issues. There have been coins, regardless of their market price, that have had issues. So nothing is perfectly safe. I'm not. That's not what I'm suggesting, but we can kind of assume that Coinbase has done their own research, and we can safely bet on um, their research that they've done and use that to our advantage. So we have 57.9 here. Okay. So this is its rank, this is its 24-hour trading volume, and this is its market percentage. So 57% of the Koval market is being traded on Coinbase within this one specific trading pair, Koval and USD. So it could be traded multiple coin pairs. So if it was Koval USDT, Koval USDC, Koval to DAI, whatever it is, whatever exchange you're working with, there could be a lot of different trading pairs, but there's 57.9% in this specific trading pair, right? The next one we're going to look at is the shipping that I've invested in. So we're going to go to shipping, if I can spell, and we're going to look here. So shipping is actually not listed, and I don't normally recommend that you invest in coins that aren't listed, and I will explain to you why I have invested in this one specifically. But let's go ahead and fill out our chart here. We're going to just continue to do this. See, I can trade on Coinbase between Euro, USDT, and USD. But our highest trading volume and volume percentage is within the USD pair here. So we got 1.2 million and 92.8%. So we got 1.2 million 92.8%. IMX is our next one. So we're going to go back, go into IMX, and IMX is listed 151, and we've got it on a few exchanges here. We can see the most traded is on Binance, but here in Texas, I'm not allowed to have a Binance account. I can't trade on Binance. So the next best option I've got is Coinbase. Okay. So Coinbase, we're trading over 3 million, and there's 8% volume here that I'm trading. So what was it? What was it? 153. Got 3 million and over 8%. And the next one finally is POSI or POSI, position token. And it is, by the way, listed 505 on its rank. And down here, we're trading on gate.io, and it is over 6.5 million, and 70% of its volume is being traded there. Okay, so we can go back. 505. What did we say? 6.5 million and over 70%. Right. So why are these good numbers? Why have I chosen to start those and hold those particular coin pair bots? Well, let me break it down for you. So at rank 404, anything in the top 500 is relatively safe. If it was a top 100 or 200 pair token like IMX, that is very safe, I would say. Top 4 to 500, it's a little bit riskier. Anything beyond 500, beyond like 1,000, is extremely risky. So my coin pair in shipping is my riskiest investment to date. The reason why we like these coin pairs is because of the 24-hour volume. So we like the 445,000. We definitely like the 1.2 million in volume, and we especially like the 3 million and 6.5 million 24-hour volume in IMX and the position token that we have here. So that's how we got our daily transactions of 196 over here, right? Because there's so much more trading volume in that coin pair than the others. And you can see that here in our daily transactions. So this all breaks down into numbers that we like. And the reason why you want to look at the market percentage and how much is traded is because the 92.8% is kind of risky. That means that there aren't many other exchanges that offer this token. So the most percentage, all of this token is on this exchange essentially. It's not many other places. So the 57.90%, we like this. It's almost like the lower number here, the better. The lower number here, the better. The higher number here for the 24-hour volume, the better. The fact that there's 3 million in 24-hour volume in IMX, and it's listed as a very high ranked coin, and it's only 8% in the market here on Coinbase for this trading pair, is a very healthy sign for this coin. This coin is many places. This coin is being traded a number of exchanges, and it is a very healthy thing to see, the 3 million and 8%, right? So this is probably our most stable investment that we're holding currently, is this IMX. Okay, so our riskiest investment is shipping, and the other two investments are good but mediocre in their risk. So 70% is still a little high of a percentage. 57.9 is better. I would like to see a higher 24-hour trading volume, but it has traded well. So profit per transaction is actually the highest on that coin pair. And I wouldn't have known that had I not been running test bots on the market. So between your demo bots within the platform of BitsGap and this data right here, right? You can also create spreadsheets based on your demo bot results, not just the bot results that you're getting with your active bots. And so that's kind of what I've been looking at. That's kind of the data that I've been breaking down. I hope this helps you. I hope this informs you of what you can look for, how you can use the software and the service provided through BitsGap to make really good educated decisions on what coin pairs are good, which ones are highly risky, which ones are really not worth it. If you're looking at anything less than 455,000 trading volume, it's probably not a good bot to start, right? The only reason that I went with this one is because I did have the demo bot set up. It was trading well on a demo bot. The coin is ranked at 404, and I decided to go ahead and give it money. Otherwise, the numbers show that these other ones would be better bots to start because of their volume, and that's at the end of the day, that's what matters the most. And then the other two categories here are more of like gauging your level of risk in that bot, in that investment. So you just kind of want to take that as a grain of salt there. Whenever you're choosing coin pairs, this is how I do it. This is all the data that I look at essentially, and I'm learning new things all the time. So drop me a like on the video, follow the channel, and we'll share more information with you as the year progresses. And as we get closer to the end of the year, we'll be able to look back and see if all of this data does continue to produce just the way it is predicted here in this first month of really actively doing this profitably. And yeah, I hope to see you next time. Thanks for stopping by. Welcome to my own space. 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 Welcome to my own space.